What's up, traders? In today's video, I will be performing a market forecast on Nasdaq using smart money concepts. So stay tuned. Now, if you haven't already, I highly suggest that you head over to the channel and you watch the previous market forecast video that we uploaded on the 14th of August, so over a month ago. Doing this will just help you get up to speed with the analysis that we've been performing on Nasdaq and to give this video a little bit more context for your benefit. Now, as always, we're going to be starting off here on the weekly time frame. The last time we performed a video, price action was hovering around about this candle in here, and essentially what we were anticipating is we saw that price action had now traded into premium pricing, okay, of this bearish weekly leg, and we're telling ourselves that realistically we want to be looking for opportunities to get short, right, in the market. Now, obviously, this strong bullish reaction that came off of this weekly demand zone was suggesting that Nasdaq was potentially recovering from this large bearish rally to the downside. Okay. However, as I pointed out in that previous video, I would only regard Nasdaq as being in a full-blown recovery after this strong high has been taken. Okay. So as you can see, price action traded into premium pricing, and then we had a large sell-off. We will be investigating on the daily chart why this particular rally occurred, but for the weekly point of view, what are we anticipating price action to do now? Obviously, we are anticipating this week low of the bearish weekly leg to be taken. All right, we're anticipating that to be taken, and then beyond this week low, we can, again, as we've been saying, we want to be targeting 10676.2, and then further down, right, we could also see price action pull all the way down towards 6623.3. Now, I know it might seem a little bit crazy to think that Nasdaq could fall all the way down to 6623.3, but it definitely is a possibility, and I want you guys to be open to the idea that Nasdaq might fall all the way down to here, right? But remember, this is the weekly chart, and in order for Nasdaq to reach here, we're going to have to experience weeks and weeks and weeks of price action first, okay? And in that time, what we might see is we might see Nasdaq break this week low. We might see Nasdaq come in and mitigate something down here before continuing bullish, right? There's a lot of possibilities that this particular market could go through, but for the near to long term, I would definitely say we want to see this week low go, and I want to see price action push down towards that 10676.2 level, right? So from that weekly chart now, I want us to go down to the daily chart. And if you have watched that previous video, you will remember that I said I was waiting for price action to come in and either mitigate this daily supply zone up here or this daily supply zone in there before seeing potential bearish continuations. Okay, that was the last time we performed our market analysis. Now, as you can see, this was a beautiful setup. We had a valid supply zone that sat within premium pricing, okay, of that weekly bearish leg. We had the imbalance below the zone, and we also had that liquidity that was grabbed on our way to that zone. The only thing we did not see, we just did not see a mitigation of the supply zone. So what does that mean? Well, it means that we did not get involved in this particular move, okay? Our rules were not met. We did not get that mitigation, okay? And this is a very important lesson that I want to teach you guys in this market forecast video right now. Even though you're looking for this particular setup, even though you're looking for price action to pull back into premium pricing to mitigate a higher probability zone before that bearish continuation, even though you're looking for that, price won't always do that, right? You need to understand, as soon as price action traded above the equilibrium, at any point in time, it could have done this, all right? It did not need to mitigate something before doing this, okay? The fact that it traded into the premium pricing of this bearish leg was more than enough for price action to roll over, okay? Obviously, we look for mitigations of these high probability zones because over the long run, okay, over a prolonged period of time, trading these particular setups have shown me to be high probability, have shown me to be profitable. So even though I missed out on this massive bearish move to the downside, okay, I am not stressed because I know that the approach to trading the market is one that is bulletproof to a certain extent. It is one that will consistently give me opportunities to get involved in the market. Now, by anticipating price action to pull back to mitigate this zone before rolling over, what we have done is we have generated a directional bias. So we know that as soon as price action trades into our premium pricing, at any point in time, we could see that bearish continuation. So once we start seeing that bearish continuation on our lower time frame, on our 4-hour and on our 1-hour, we will then be having a lot more opportunities to get involved in this bearish continuation. So even though we missed out on a mitigation in here, right? The fact that price action has now started to move bearish has now created even more opportunities to get involved on that lower time frame. All right. So from a daily point of view, we can see that we did not get that mitigation. We can see the price action is now on its way to this particular week low. I want to draw your attention to this bearish move that occurred in here. What we can see is we can see two really nice daily supply zones that formed as price action pushed down, right? We have this first supply zone in here. We know that it is a valid supply zone because we have a valid breakout structure to the downside. And then we have the secondary supply zone that formed. We know that it's a valid supply zone because it also led to that breakout structure. Both of them are engulfing candles, okay? Both of them have that imbalance left over, and both of them lead to those breaks of structure. So even just here from a daily point of view, what we can see is that after price action traded into that premium pricing of that weekly bearish leg, we had this break of structure to the downside that gave us another bearish leg, okay? And then this secondary break of structure gave us now another bearish leg. Now this is going to be a lot clearer once we drop down to that 4-hour chart, but I wanted to show you guys that even though we missed the opportunity to get involved in here because price action didn't mitigate, we had more opportunities form after price action continued with that bearish move, right? We had this first bearish leg and then we had this secondary bearish leg. Now, if we drop down to that 4-hour chart, now we can investigate those two legs a little bit closer. So here on the 4-hour chart, as you can see, this is our first bearish leg that occurred after price action reversed from that premium pricing zone. And as you can see in here, we had a valid 4-hour zone that formed in here. All right, we had the valid break of structure, we had our strong high up here, we had our weak low down there, and you can see once price action formed that bearish leg, we had a pullback into premium pricing before price action continued down lower. Now obviously, all right, obviously you can see that again here on the 4-hour chart, price action stopped just short. It stopped just short of mitigating that daily zone. Remember, this is my daily supply zone that we just marked out on the daily. So price action stopped just short of mitigating that before continuing over. Again, we missed out on that opportunity. But even though we missed out on the opportunity, notice how our idea of what we wanted to see price action do, notice how that idea played out, right? We wanted to see the formation of a bearish leg. Okay, we know how to identify those. After that is formed, we wanted to see price action pull back into premium pricing of this particular leg. All right, that's what price action did. And then the only thing that price action did not do is it did not mitigate something before continuing to form another leg. So even though we missed out on that opportunity, our approach, what we wanted to see, is something that played out. So after price action stops just short of mitigating our daily, we have another bearish push, we have another break of structure to the downside. This was obviously now the weak low, right, of this bearish leg that was taken. So once that break of structure occurs, we obviously now have a new 4-hour leg that is formed. So we can bring our strong low and mark it out here. This is that second daily supply zone that we marked out. We obviously have the 4-hour extreme in there. So this one again would be a valid one for us to look to trade from. But as we've seen now, we haven't had that mitigation in the past. That does not mean that we're going to be rushing into trades when price action is hovering around here. We are only going to trade something when that mitigation occurs. Now, what I'm anticipating here on the 4-hour chart is we want to wait, okay? We want to wait for this to be confirmed as our weak low, right? If we're looking at it from a swing structure point of view, essentially what price action has been doing is price action has been pushing down in this manner, okay? So we've been having price push down, creating lower lows, right, in here. And we've been seeing price action creating lower highs. So we're obviously bearish. But at the moment, okay, this is an unconfirmed low for me. This is a floating low, right? We have not seen that change of character on our lower time frame. So once this low is confirmed, then we will have a new bearish 4-hour leg in here, okay? And because we have, once that 4-hour leg has been confirmed, we can anticipate price action to have a bit of a bullish recovery, a bit of a bullish relief, before potentially continuing with that underlying bearish trend. Right now, the interesting thing with this particular bearish leg is the fact that we have this 4-hour supply zone in here. Now, the reason I like this 4-hour supply zone is because it sits at the equilibrium, all right? It sits at the equilibrium of this bearish leg. So what we can anticipate is we can anticipate price action to pull back, and then this would be the first area that we are going to start looking for potential entries for price action to pull down lower. So this is going to be our first supply zone that we want to see a potential mitigation from before that bearish continuation occurs. We have the imbalance, all right? We have the liquidity. We know that it is a valid supply zone because it also led to this, I guess you could say, internal structure, or this internal break of structure to the downside. So this would be a valid setup for us to trade from. Okay, we have some engineered liquidity in there. As we anticipate price action to pull up towards here, we could also start looking for potential counter trend setups as price action pulls up. All right, now if this supply zone does not hold, then we could see price action push a little bit deeper, potentially towards this extreme zone. All right, understand that we also have that imbalance that sits below the zone, and that we also have this liquidity in here that sits below this particular level in here. All right, so when it comes to this 4-hour zone, you need to be very careful because of the fact that it sits just below liquidity, right? So this might not be as high probability to trade from, purely because of the presence of this liquidity. But essentially, for Nasdaq, for the coming weeks, this is what we're anticipating. We're anticipating price action to pull back. Now, if this low is confirmed, obviously, once you see that pullback, look for potential mitigation and continuation from here. If that does not occur, we could see price action push a little bit deeper, potentially mitigate this extreme zone before continuing down lower. We could also see price action pull back, disregard this supply zone, stop short of mitigating that supply zone as we've seen in the past before continuing down lower. If that happens, it's not a problem. We wait for an opportunity to present itself to us, right? So just a very quick look here at Nasdaq. If you guys enjoyed this video, please make sure that you hit that like button, subscribe to the channel so you don't miss out on any future content. I appreciate you guys so much for watching. I appreciate all the support we've been getting on the channel lately, and I hope to see you in the next one.